Turbo Trading with head trader Robert Knight, MBA.
This is a video on what to expect in the markets coming into the year end, the last 2 weeks over the Christmas break. Christmas this year is on Friday, December 24th. It's only a half a day. Markets close at 1 p.m. Eastern time. They reopen on the 27th, and then so they'll be open 27th to 31st. So it's a full day on December 31st. So the thing about it is that obviously this is the one of the most important Christian holidays of the year, and so a lot of people observe the holiday season. Not only the religious side, but most companies also just if they're not religious, then they do take breaks during that time period because everything shuts down, as we know. So what can we expect? Well, one of the things that you'll find, and it's going to be starting now, today actually, probably this week going into the 24th, is that the volume will really start to dry up. Now, the last couple of days, it's been very strong. We can see that. But coming into this Christmas holiday and through between Christmas and New Year's, it's going to be very quiet. Most people are away on vacation, or they just don't bother to trade. So what you find then is, now let's go back and look at some previous history. We see here the December time frame markets last year, well, with the COVID sell-off, and then the next wave started in November. We did have a sell-off, but it rebounded very quickly. So, and here we see it, of course, just before COVID, the markets were off very sharply. This year, back in 2018, the markets were strong, pulled back. 2017, there's no, they drifted off. 2016, they were strong. 2015, they sold off just before Christmas and then took off again. So one of the things about stocks, if there's no volume, they tend to drift lower. They'd fall under their own weight. But that isn't necessarily, but there is no sort of necessarily a period of time in December that stocks are up or down. Lots of people say that's the Santa Claus rally, and you see the markets go up coming into the new year. Others say it's tax loss selling and they sell off. Maybe it's a combination of both. So that's not the important part. What the important part is that the liquidity dries up, and you can get extremely violent moves up and down. You get a lot of stocks if especially these low floats, if there's nobody around and they start, the chat rooms get a hold of them and start buying them up, you get huge moves to the upside. $30, $40, $50 moves in some of these penny stocks, really, stocks trading, say, under $5, and they'll move 10 times higher because there's no selling pressure. Nobody's around to deal with it. So what would we expect from the market here? It's not really telling us anything. The market, the daily chart is consolidating in here. Had a triple top, it's double bottom, it's mid-range, could go either way. All we know is that come Christmas, between Christmas and New Year's, that the volume will dry up and the volatility will increase dramatically. That's typically what happens.
Don't forget to like and subscribe to our channel.